Hi, today I'll be explaining what petty cash funds are. Petty cash funds determine the amount of money that an employee will keep on hand to cover small expenses of the business. Things such as office supplies, parking expenses, and staff lunches are often covered, as writing a full check wouldn't be time effective. There are 3 steps involved in the operating process. The first one involves establishing the fund. To establish the fund, a business will write a check for the given amount of the fund. The business will then cash this check at a bank and distribute this cash to a trusted employee who is now the custodian of the fund. To record this transaction, you have to debit petty cash and credit cash by the amount of the fund. This is important as you are increasing your assets and decreasing your assets to the same amount, so there will be no net movement. Remember that petty cash funds are asset accounts, not liability accounts like some people get confused with. Now, step 2 involves making payments from the fund. The cash that is used to pay for the agreed qualifying expenses can be covered through cash that is directly taken from the fund, or cash that the employees use and then seek reimbursement from the business. Now, as the expenses are paid through petty cash, there will be no journal entries made as the bank is not yet affected. Step 3 involves replenishing the fund. So at the end of each period, the cash in the fund needs to be replenished. This is achieved by recording the remaining cash in the fund and cashing a check that replenishes the fund back to its original opening balance. So let's say that Costanza Limited spent $50 on a staff lunch and $95 on postage stamps during the duration of December. To record this, you need to make a petty cash fund replenishment report. You less the cash remaining in the fund from the original petty cash fund amount and add cash requested to replenish the fund. The receipts in the fund are the expenses that we will use to record in the following journal entries. As you can see, the postage expenses and staff expenses are debited and cash is credited, not petty cash. Now, the amount of cash needed for replenishment should equal the total amount of receipts, but when this is not the case, it goes to a cash over and short account. Now, the cash and over and short account is a temporary account that records the discrepancy between the amount between the actual ending cash balance and beginning book balance of petty cash. This is used when custodians give incorrect change or custodians don't retain all receipts. Thank you for watching.